Don't panic. The bull market is still intact unless Bitcoin crosses this line in the sand. Hey guys, it's Keith Allen. What an unbelievable week we're having here this week. And gosh, the last 24 hours have been hectic for a lot of people, but I don't want you to panic. And man, I'm going to apologize right now. I got a brand new microphone and I'm already not really loving it. So please let me know if you can hear the audio okay. On that note, it's worth noting that live chat is open today. I love having you guys here with me. I love engaging with you guys. So if you have questions, if you have insights, I want you to share them. If you got questions, I want you to ask them, and let's kind of navigate this thing together. All right. Before we start, as per usual, do me the favor. Right. I'm giving you this free alpha day after day, week after week. Do me the favor of smashing all the buttons. Make sure that you especially hit that subscribe button up above there. And I'm going to give you a few seconds here to just share this thing because that helps me out a whole lot, right? So I can keep doing this thing. We got to grow this channel. We are we're lacking so in that department. So let's get through this together. It looks like Alexander's already here. Hey, Alex, good to have one of my regulars with me, and I invite everybody else to become a regular here too. If you have been, then you would not be surprised by any of the moves that we've seen here in the last 24 hours, or even where we've bounced from. This may prove to be a temporary bounce, so we're going to get into that and a whole bunch more. We're also going to look at we'll look at ETH, maybe we'll look at a couple of alts along the way, and get a sense of what's happening here. I think most importantly, I want to remind you guys, this is not again, this is not a time to panic. We can smell the fear in the market, but don't take the bait. Instead, it's a time for caution, disciplined risk management, and strategic positioning, right? Find the opportunities that on the assets that you're interested in and focus on those. Don't try and chase everything. Focus on what you have the most interested in. Focus on quality. This is not a time to run for the shitcoin of the day. This is a time to focus on quality. And so without further ado, let's go ahead and jump in. First things first, I'm going to start on FireCharts because we've got some brand new developments happening in the liquidity. And then we're going to go back and show you how we got to this point, what the bounce is looking like, whether we put the bottom in or not, and potentially where we could go if not. All right. So for starters, I'm going to take you over to FireCharts real quick. For anybody that's new, this is a heat map of the order book. By the way, material indicators. In full disclosure, I'm a co-founder of Material Indicators. These are our tools, and we are having a flash sale. It's not a coincidence, by the way, that the flash sale is for 30% and the dip has gone 30%. I kind of forecasted that. That's a whole secret. Okay, so flash sale ends tonight. If you want to take advantage of this, go do it today. I'll have the links in the description, but the promo code is MIAlpha30 for 30% off. So let's go ahead and climb in and see what we're looking at here. See these white lines here? It appeared here at about 81.8K, and it was 34 million bucks. And then as price was moving up, boom, it popped up to 117 million bucks. And now it's faded back a little bit, still 117 million. What's going on here? Well, number one, as I shared in our community, and oh my gosh, our communities have been on fire here this week. And if you're not there yet, I encourage you to join our Telegram communities. You'll find links in the description, and you'll find links on the Material Indicators X page to get to the Telegram community. If you're into the alpha, that's where it happens first. Before I post anything on YouTube, typically, or on X, typically, I typically post in our community channels. So I encourage you to join us there. There's a lot of alpha and a lot of great traders in those communities. So by all means, we'd love to have you. And so that's where I've been, all morning, and most of the night last night was there. So this is something I like to call liquidity herding. These guys don't really have an intention of getting filled here, but they are trying to keep price elevated. So this is somewhat of a plunge protection. You might consider it a trap. Sometimes it is. And so that depends on whether we have indeed put a bottom in here or not. And so with that, let's flip over to the candle chart and see exactly how we got to this point. As I posted on X this morning, this is a 4-hour chart, and it's a 4-hour chart because that is a direct reference to the 4 hours of sleep I got last night. But look where price went. It went exactly to my trend line, almost exactly to the trend line. And we have this CME gap here. To clarify, I am not a gap trader, okay? But I know a lot of people are. And this one was interesting to me because of the confluence it has with the trend line here. Now, the fact that it did not get completely filled, that is an area of, well, I'm not going to call it concern, but I won't call it a warning, because typically, unless you have just a steep V-shaped recovery, right, which this could develop into, but right now it's has more of the how should I say, characteristics of a dead cat bounce, until we start reclaiming some key levels here. And I'll go to the daily chart so we can get to what's really important here. I mean, you're looking at just a major wick here, right, on the daily chart. And let's not be don't get lost on us that we have a monthly close coming up today. Look at where we're leveling off right here, by the way, right? Some confluence with candle bodies on the past couple of days. So that's interesting. So the fact that this gap did not get filled, and the fact that we had this big wick down here, right? I typically like to see a retest of support levels. And so I would expect at some point in time, and it may not happen today, it may not happen this weekend. It could, certainly could, certainly have enough catalyst for the volatility, and certainly enough FUD in the market for it. But at some point in time, I do expect a retest of this support level. And when that happens, maybe we actually go ahead and completely fill this CME gap right here. For anybody wondering at home, that CME gap is at $77,930. Front runners were coming in last night, and so that may be why this wasn't filled yet. But again, I find it very interesting that price went this far and didn't make it all the way down to the gap. So I do want to see that gap actually get completely filled. That gets us a wick through the trend line. Now, could we potentially go lower from there? And the answer is, and you may not want to hear this, the answer is yes. Now, why? Well, the list of reasons why is way too long, but we could sum it up by saying things like economic uncertainty, tariffs, geopolitical tension. You know, we had some interesting economic data come out this morning. A bit of a mixed bag. I think all in all, for the most part, positive. But so the PCE month over month was right on target. Personal income. This was the big win, right? This was a huge. Hugely positive number here, 0.9%, when only 0.3% was forecasted. So this was a big number on personal income month over month. Spending is down, however. And so as we look down the list, PCE month over month, this was as forecasted. PCE year over year, also as forecasted. A bit of a contradiction here between wholesale inventories and retail inventories, but I would say this kind of makes sense because people were anticipating the tariffs, right? So maybe there is some stockpiling of inventory based on concern about tariffs. Core PCE index year over year. This one came in a bit cooler than expected, so that's not great. Well, actually, no, it is actually it's right as expected. So we're right, we're aligned right there. Okay, so that's good. I think all in all, a relatively positive economic report. But of course, there's always more to come, and in the coming days and weeks. We have for next month, especially, right? We've got a candle close tonight on the monthly. And then next week, we start with a whole new round of data that the Fed and Fed watchers will be watching. Most specifically, We will have more jobless claims, non-farm payrolls, and unemployment coming up next Friday. So I'm expecting volatility to continue through that. And then, of course, mid-month, we have an FOMC meeting. That would be the March, I think it's like around the 17th. We have a FOMC meeting where they make their Fed rate decision, where they're going to cut, pause, or raise. At the moment, there's not a lot of indication that we're going to see a cut coming yet, but obviously the market always anticipates what's happening there. So let's just confirm when that is while I'm at it, right? I'm pretty deep into this thing, so let's see if that shows up here. FOMC. I thought it was mid-March. Oh, here it is. It's rate decision coming up on the 19th. So it's Wednesday the 19th. That's pretty deep into the month. So that's, that basically means we could see a lot of volatility through the month of March as well. Alexander's is waiting on 77K, and I'm assuming that coincides with where the CME gap is. We had initially drawn some lines down here in this range around this 75 to almost 77K range, and that's certainly a viable target, right? That could possibly happen. We did have a little bit of consolidation there, but I'm going to explain to you why we could see things go even lower, and I'll tell you why. This is not what anybody really wants to see. I really feel that this trend line, which goes all the way back to really September 2023, this to me is the strongest level of foundational support on the chart. So I think this would be just really the strongest place we can bounce from. And the bounce that we're having right now may or may not develop into the actual real total bounce. Now, there's some positive signs here that conflict a little bit with what's on the date on the other. Excuse me. We have a conflict between a negative sign here on the daily chart and a positive sign on the weekly chart. One is this death cross between the 50-day moving average, that's the red one, and the blue 100-day moving average. Right. This will indicate a continuation of this downward momentum, even though it is indeed a lagging indicator. But on the weekly, we're still unwound here. Okay. Green is the 21, red is the 50, blue is the 100, purple is the 200-week moving average. These all look good to me, very solid. So there's that. But in terms of where we could potentially go, as I had shown you guys on another chart here, we have, you'll notice it's in orange, by the way, the election day Trump pump, which obviously has been broken now, right? And so I had expressed to you guys on many occasions that I felt, and this was pre-election, I felt that if the Republicans won the election, that we would see, because of Trump being a crypto-friendly candidate, that we could see a price spike. We could see a pump on crypto, followed by a correction, and then things would consolidate, and then Bitcoin would return to its normal trajectory. Likewise, I felt like if Harris won, then we would see a dump, a consolidation, and then Bitcoin would return to its prior trajectory. In other words, all of the political noise was just that, and price is likely, Bitcoin's going to do what it does regardless of who's president. So with that in mind, that could bring a retrace. As you can see, these are quarterly levels, by the way, open and closes. We could, and there's nothing left here because this is only from 2020, 2024, 2025. We could see a full retrace here. And where would that take us? Guess where that takes us, folks? That takes us exactly to where this party started. If we go back to our regular chart, I have shown you guys more times than I care to count how much resistance we had at this 69K level. And here's why that's important. Well, the whole market was saying 70,000, 70,000, 70,000. 70,000 was not a technical level. 70,000, in my opinion, was a psychological level. 69K was the 2021 top. It served as resistance for years until we started engaging with it, and we had rejection after rejection, fake out after fake out. I mean, dozens and dozens of times. When did we break out from that? Well, guess what? It was November 5th, election day, beginning of the Trump pump. So we could conceivably see a full retrace where, we could argue that, if we break this trend, we're done. Given the current environment, I would say that this is my line in the sand. Okay. Because it's conceivable. Yes, there's some consolidation support here in this 75, 76K range, but not a lot. Even less than we had here at this 69, at this 86K level, and we obliterated that. So imagine we have a full retracement here, right? And then guess what? And then Bitcoin gets right back on the trajectory it was on. So don't rule that out at all as a possibility. Now, do you want to take this ride all the way down? That remains to be seen. It depends on your approach and your strategy. I would tell you that I have dollar cost averaged my way into a position dating all the way back to the FTX crash back in 2022. All right. So I have little entries from down here in this 15K range, a little bit from up here, a little from up here, a little from up here, et cetera, et cetera. Did I hold as much as I wish I had from down here? I'm not going to pretend that I did. I did not. Right. I have very little from down in this range because I thought we were going to see more degradation. And that's why I'm trying to take a lesson that I believe I've learned and not panic here and buy the blood, if you will, even if some of that blood is my own. And the hardest part about doing this is watching your portfolio value erode. Okay. Nobody likes seeing that happen. So if you sold some at the higher levels, congratulations. I applaud you on that. And you're looking for your opportunity to buy back in. If you're going to be conservative, maybe this isn't it. Maybe you want to wait for this retest of support to come back down here. And we're seeing this in a lot of coins, mind you, right? I told you we would look at ETH. Let's look at ETH. And for the record, yes, I did buy here. For sure I did. I still have an order open here that did not get filled on the CME gap. Hoping that it does get filled. And I do have bids placed here in case we do take that trip. So I've saved some powder for that. Likewise, ETH, and this is not something that I trade very frequently, but I do have a position that's been underwater, and I saw this as an opportunity to dollar cost average my way into a better position. I mean, looking at the amount of time that ETH has spent at this level, I think this is a pretty good spot. Whether we fully recover from here or not, I think this is a pretty good spot to dollar cost average from. So I did pick up a little bit here in this range. I could certainly see that getting overshot, but I don't have the same knowledge or confidence in ETH that I have in Bitcoin. So if things go too much lower from here, I'm going to cut that position. Alex is asking, by the way, guys, let me know how the audio is, because this mic sounds a lot different to me than the one that I used to use. We did a day or two with no mic at all. I was just using the computer mic, but please drop a comment and let me know if this sounds good or if I need to keep my microphone shopping going. So how do you see total in weekly? There is a way down, right? Well, let's see. I do have that chart up here if you're talking about total 3. Where is it? Where is it? Here we go. Yeah, way down. Total 3, that's the purple one. That is, for anybody who doesn't know, it is pretty much all assets excluding Bitcoin and ETH. So it's pretty much the altcoin market, shitcoins, memes included. USDT dominance on the rise here, right? This is safe haven. But remarkably, Bitcoin has held surprisingly well, even though it dipped below this RS flip line, still held 60% or higher. And so it's now bouncing back up a bit. But until USDT dominance starts to erode, we still have a lot of fear in the market. That's a sign here, and you can see that total 3 is just getting hammered here, right? Let me clear some of these others out. So let me just clear Bitcoin dominance out for a second, so you can see total 3 alts are getting beat up, bad. So that's not the safe haven, but there are some fantastic opportunities. One that I like and unfortunately missed was a chance to pick up some more Litecoin down here. I did get shaken out on Litecoin yesterday. I continue to not make great decisions. I've done well on Litecoin. I have I think I bought it from down in the mid to upper 80s. I sold it in the 120s. I have bought back in and sold a couple of times. And yesterday I had dollar cost average my way into a position. And when I saw this dump coming, I was like, you know what? I don't want to give back everything I just made. And I want to be able to reinvest that powder into something else, potentially Bitcoin or better Litecoin position. It didn't make it down to as far as I was hoping. I thought we might get just a crazy wick down here to the 91 level. Hasn't happened. Doesn't mean it can't. And if we get that retest on support and Bitcoin breaks through that trend line, then we could see the rest of the market drag down with it. So I still have a bid down here, but I may reevaluate this one. That was a slightly below break even deal for me yesterday on that. Now, noticing, of course, we have some trend precognition signals. We have a monthly signal coming up. Well, potentially a monthly signal coming here at the candle close. And I can tell you that just looking at the A1 algo down here, that's the one with the line and the dots. We have a good chance of seeing a down signal here, which would indicate that we're topping on the month for Litecoin. On Bitcoin, let me go to a trend precognition chart and see if we can hone in on that a bit. Oh, and another level I want to share with you as well. I'll get back to you on that one here. So trend precognition on the, let me turn it on. So on the daily trend precognition, as you can see, we got the signals that things were not looking good up here, right? So that was fantastic. This indicating the bounce that we have today. On the weekly, which obviously we have that coming up on Sunday, we have what I don't know why this didn't show up on my other chart. I think I had something confused here. But we see I need to double check these moving averages and make sure that they're set right. But I'd love to see this. Actually, I don't think those were wound up at all on the weekly. Was that different on this chart? Pardon me while I look into that. Yeah, I got to check something. Something's not right here on my moving averages. I may need an update or something in there. So we'll exclude that from the discussion for the moment. While I can sort that after the fact. But on the monthly, oh, I'm on the wrong chart again. On the monthly, and let me just shut these down. On the monthly, you can see we're coming off of a down signal, which we got, and it looks like we could continue that trend. Now, it would be nice if this wick gave us a reversal and we see this A1 slope line, that's the orange one down here. If we see that tick back up, that would be a positive sign. So we'll be watching for that at the monthly close. But here's something else I want to show you. And I've shared this with you before. Notice the RSI on the weekly. Right, 41, 42. I got it right at 41.5 now on this chart. This is a spot that really has historically signaled whether or not we are indeed in a bull market or a bear market. And anytime we get below this, well, you can see things go south. And when we're above it, even though we might have these dips in volatility, things go north. And so it looks like we could be headed for a retest of that. And that's something I'll be watching very, very closely. If we get a break below, that's not something you want to see. and that would be another indication that that it's the end of the bull run. So that's another line in the sand for me. Is this weekly RSI for Bitcoin? Hope that gives you something insightful to look at. What else have we got to look at here? Oh, we could check out a couple of other alts. What would we say? We looked at LTC. Let's look at Solana, which has just been getting hammered. Solana's been getting beat up pretty bad, and look where it went, right to the trend line. Not to the trend line, but to the prior RS flip level. Wicked through that a bit, and now trying to reclaim some ground. The fact that it did make its way back above the 0.5 fib is a positive, and this could be a great opportunity for Solana. I would look potentially for a retest of support here, and if that breaks down here to the 382 as potential entries on Solana. If we lose that, then there's nothing structural till we get back down here, and then we would be revisiting a prior consolidation level, prior RS flip level, way down here. So this would be a long shot. I really wouldn't expect this to happen, but who knows with what's going on in this market. Doge, another popular one. Haven't even looked at this, so we're doing this blind and in the fire, if you will. And it is actually holding on to this trend line here. So that may be an opportunity. I'm not a big fan of the memes. The only interest I have in this coin is related to Elon Musk and the fact that he's, been as bold as to name the government agency that he's kind of created out of thin air, Doge. And who knows if maybe someday there's some incentive for Doge either on the X platform or otherwise used in a true utility fashion or a payment fashion. So I have a little bit of that, but I'm not married to it. And if I see a breakdown, I'm just dumping it. Like every time I start playing with alts, I'm reminded of why we call them shit coins. So my focus is really on Bitcoin, and that's exactly why I'm going back to this chart. In terms of the dip that we've seen here, listen, I've been preaching for years, 20 to 40% corrections and even greater are common. We've had some that were bigger in the past, including this mid-cycle top here, which I think was about 56%. We've seen bigger corrections than this. And so don't be spooked by this. This could absolutely, and quite frankly, this could mirror what we're seeing here, right? This could be our mid-cycle top, and we could get another rally after this. So that's what I'd really love to see here. And if that does happen, then my targets would be exactly what they've always been. That's unchanged. We have a target on this cup and handle that was up around 122, between 122 and 125K. So I'd still like to see that play out as a potential level, and presumably higher, right? The next fib level up above that is at like 149 level, and then up to maybe even closer to 250. That is highly speculative and really going to depend on the administration on a number of levels, including what's happening economically, with tariffs, et cetera. What kind of policies we get out of the SEC in terms of regulating Bitcoin and alts and DeFi. So we know we have a crypto-friendly administration, but we still don't yet have the definition of those policies yet that we're looking to see. There's a lot to watch this weekend, and I am sure that it is going to be pretty spicy here for a little while. So I would encourage you guys to spend some time looking at charts here, figure out what levels you're comfortable with. Be nice if this holds as plunge protection for the weekend. I'm not sure if it will. The fact that it's moved around several times already is an indication that you can't really trust it. But as long as it's there, it's plunge protection, and there's a lot of it. Likewise, it looks like we have some coming into the upside as well. Not nearly the same volume, but there's something significant with this 90K level that would um, be a justification for keeping that lean. And one of those justifications is reclaiming all of these levels here, especially wanting to see the 21-week moving average reclaimed. It currently sits right at 90,246. So that explains why we see some overhead resistance coming in on FireCharts right here. They're trying to prevent a move from up here. So if this plunge protection holds for the weekend and we get to just range in here, then I would suggest you sit on your hands, take some time looking at charts, identifying the assets that you want to pick up, trade, or invest in, and set those trades. Take the emotion out of it. Set your limit orders, set your stop losses, set your take profits before you even open the trade. And that takes all of the emotion out of it. Simple as that. All right, guys, with that, I'm going to wrap it here for the day, but I will, of course, be tuning in throughout the week and weekend. If I see anything major developing, I'll do my best to keep you updated. Again, flash sale at Material Indicators going on right now. Final day is today, right? So this ends at midnight. If you want to take advantage of it, I encourage you to head over to materialindicators.com. Yeah, I posted this. I think last night. Bitcoin's having a flash sale. ETH is having a flash sale, and so are we. 30% off. My Alpha 30 at checkout for 30% off. Links are on the X page and in the description of the YouTube video as well. Thanks again, guys. I appreciate the support. Have a fantastic weekend. I hope you do spend a little time away from screens doing something you love with the people you love. And that's a wrap.